Office building owners, a newer roof, not having a claim before, and great tenants can lull you into thinking the risk is low. But real estate is one of the highest risk businesses for large claims. Whether it be natural disasters, a fire, or water damage from a frozen pipe, we see it all the time. In this video, I'm going to show you the exact coverages building owners need before you start shopping for quotes and some examples of pricing for office buildings specifically. I'm Austin Landis, and I run a commercial insurance agency with real estate clients across the US. Insurance works very well for large businesses because they have a lot of expertise and great insurance people at their disposal to help them avoid traps. I create these videos to give smaller and mid-sized businesses the tools and the resources to never get taken advantage of by insurance companies. There are so many traps and pitfalls that building owners fall into on their insurance policy. They get hit with co-insurance penalties after construction costs jump up. They have to pay for code upgrades out of pocket because ordinance and law coverage was taken off their policy. Water damage isn't covered because the carrier added an exclusion, and it could be a million different things. On the liability side, the fine print can quietly gut your policy. Assault and battery exclusions could leave you uncovered after a parking lot fight, or animal exclusions that turn a random stray dog bite into your problem. Before you even look at the premium, make sure you have a list of requirements that meet your coverage objectives. There are too many things to review in this video, so I've included a checklist below that you can download that details what coverage options you have and what you should require out of any quote so that you can make a more educated decision. Here's my method for insuring office buildings. I first secure the property. That is the policy with the highest cost and is the most risky. It is also the coverage where all the exclusions, or most of them, will be added so that claims don't have to be paid. This pays for property damage that occurs to the building that you own. For example, if a wildfire were to damage or burn down your building, this would pay to replace it. I seek out a policy with agreed value or a waiver of coinsurance tied to the current replacement cost valuation of the building so that you can't get penalized for underinsuring the building. I want ordinance and law to cover the undamaged portion, the demolition, and the increased cost to rebuild to code if code enforcement comes out and tells you have to upgrade your building to get an occupancy permit. I want business income or loss of rents coverage written so that you can maintain cash flows while the property is being repaired. I want to make sure that we have an adequate amount of water damage limit. If it has to be limited, I want it to be at least $100,000. I want to make sure that theft is always included as a covered peril and not excluded. This is especially important in areas that copper might get stolen out of HVAC systems or buildings might get broken into. And replacement costs on the roof, if it is a newer roof, especially around 10 to 12 years old or newer, you should have replacement cost on the roof. And make sure that the deductibles are not too large for you, especially the wind deductible if it's a percentage deductible. And lastly, I want to make sure that equipment breakdown coverage is included on the property quote. Once the property side is right, I then add general liability coverage, ideally with the same carrier as the property. This policy covers your premises liability. For example, if someone were to trip over a curb and claim that this happened because it's dangerous and then they subsequently sue you. Once you have put together a good policy, property, and liability, I do have a couple of suggestions for you. Instead of lowering the building value, increase your deductible. With underinsurance penalties, lowering the value benefits the carrier more than it actually benefits you. Your coverage will go down faster than the premium discounts as a result of lowering the building value. Increasing the deductible creates more predictable claims outcomes, and you'll probably still be out of pocket less per claim than if you were to undervalue the building. Additionally, always require your tenants to have liability insurance and add you as an additional insured on their policy. If they don't have liability insurance, your policy will end up paying for all of their issues. Keep records of all the construction projects that you have, especially the roofing projects. Many policies will depreciate the roof if it is over around 10 or 12 years old. Being able to prove that the roof is newer will come in handy if a claims adjuster ever tells you that it's an older roof. A protective safeguard endorsement is commonly added to buildings that claim to have sprinkler systems or central station burglar alarms. If you accept the discount from telling the insurance company that you have these items and at the time of a claim that you don't have them, it could affect the status of your claim or get it denied. If you accept the discount, make sure you're 100% 100% sure that you comply with the requirements in the Protective Safeguard endorsement. Lastly, get a catastrophe model for your property. You should be able to get this from an agent that commonly works in the real estate space and looks something like this. It puts your property through a risk modeler and tells you what claims are most likely to happen in your area based on like crime, wildfire, wind, tornado, hail damage, a lot of different things. I highly suggest looking at this report. Real estate is one of the few industries where we regularly see catastrophic full limit losses. We have multiple open claims right now for this exact thing. A couple claims for tornadoes, some wind damage claims. We had a fire completely burn down a $14 million building recently. It is completely random, but this means that you need a serious policy from a serious insurance company that plans to pay the claims that you have. The effort to find this is 100% worth it. I'm including a concise checklist below. Hand it to your preferred agent or carrier and it'll help you have more meaningful and strategic conversations about your insurance. The price gap between strong coverage and a bad policy is usually pretty small when it comes to pricing until the day that you have a claim. A quick word on pricing expectations and how to present yourself to the market. Carriers are going to look at things like construction and protection, like frame versus masonry construction and sprinklered or non-sprinklered protections. The age of the roof, the age of your HVAC systems, your tenant mix, the hours of operations, prior losses, vacancy levels, and especially their experience in your area. You can't change geography, but you can document upgrades, show a leak response plan, keep service records for alarms and sprinklers, and validate that your building limit is adequate, such as the replacement cost in your area. That's how you earn better terms without sacrificing the coverages that we just locked in. Here are some real examples of pricing. The first building is in the state of Washington. It has a building value of around $1 million, a loss of rents coverage of around $60,000, has a $5,000 deductible, and they got a $1 million general liability policy. The annual cost is $1,885, and that equates to a monthly cost of around $157. The second building is in the state of New Mexico. It has a building value of $1.3 million, a loss of rents coverage of $35,000, a $5,000 building deductible, a GL limit of $1 million. The annual cost is $5,891, and that equates to a monthly cost of $490 per month. And lastly, in the state of Virginia, there's an office building value of $410,000. They wanted a loss of rents coverage of around $50,000. The property deductible ended up being $2,500. They got a $1 million GL policy. The annual cost is $1,456 with a monthly cost of $121. If you're an office building owner and you want your insurance handled the right way, grab the checklist below, start a quote on our website, or use the link to schedule a time on my calendar. We have a team dedicated to commercial real estate and can help you find some options to insure your office building.